Everyone opens a chart and asks the same wrong question. Should I buy or sell? That's not the problem. The problem is you're asking too late. Price already decided something before you even touch the chart. Your job as a trader is not to predict the future. Your job is to understand what price is already telling you. Most beginners don't lose because they lack strategies. They lose because price is speaking and they don't understand the language. In the next 5 minutes, I'll teach you how to read that language from zero. No complicated indicators, no fake secrets, just how price actually behaves and why. If you understand this, charts will never look random again. When you open any chart, forget profit, forget loss, forget money. Look at price like a story. Every move you see is a decision made by humans: fear, greed, panic, confidence. Technical analysis is simply the skill of reading those emotions on a chart. Price doesn't move randomly. It moves because buyers and sellers are fighting, and one side is winning. Your only goal is to identify who is in control. Let's start with the most basic thing on the chart, the candlestick. Each candle represents a time period: 1 minute, 5 minutes, 1 hour. Doesn't matter. Inside that candle is a full story: where price opened, how high it went, how low it went, and where it closed. If price closes near the top, buyers won that fight. If price closes near the bottom, sellers dominated. Stop memorizing patterns. Start understanding intention. A candle is not a signal, it's evidence. Now zoom out. Before anything else, you must answer one question. Is the market moving up, moving down, or doing nothing? That's called the trend. An uptrend means buyers are confident. A downtrend means sellers are aggressive. A sideways market means nobody is sure. Here's the rule beginners ignore and pay for later. If the market is moving up, your job is not to sell tops. If the market is moving down, your job is not to buy bottoms. The trend is not your enemy. Your ego is. Trade in the direction where the market feels comfortable moving. Now let's talk about the most powerful concept beginners underestimate: support and resistance. These are not magic lines. They are memory zones. Support is where buyers previously said, "This price is cheap." Resistance is where sellers said, "This price is expensive." Markets remember pain. They remember profits. That's why price reacts at these levels again and again. Don't draw perfect lines. Draw areas, because price doesn't respect precision. It respects psychology. Next comes volume, the truth detector. Volume tells you how serious the move is. If price moves fast, but volume is low, that move is weak. If price moves with high volume, that move has commitment. Think of it like this. Price shows direction, volume shows intention. Big players don't hide in low volume. They leave footprints. Now about indicators. Indicators are not evil, but they are misunderstood. Indicators don't predict markets. They react to price. Use them as confirmation, not decision makers. One moving average to understand trend is enough. One momentum indicator is enough. More indicators don't give clarity. They give excuses. So how should a beginner actually use technical analysis? Simple. First, identify the trend. Second, mark key support and resistance areas. Third, observe how price behaves near those areas. Fourth, check volume. Fifth, manage risk. That's it. If any step is missing, you don't trade. Professional traders don't trade more, they wait more. Here's the hard truth no one tells beginners. Technical analysis will not make you rich fast, but it will stop you from making stupid decisions repeatedly. And in trading, survival comes before success. If you learn to read price calmly, you'll stop chasing trades, stop forcing entries, and stop blaming strategies, because you'll finally understand what price is actually doing. If this video made charts feel clearer instead of more confusing, you're on the right path. Subscribe, because next we'll apply this on real charts without overthinking, without fear, and without indicator overload.